Welcome back to Halftime Report. Joining us on the show now is Kishore Narne. He's head of commodities and currencies at Motilal Oswal. Kishore, hi. Thank you so much for joining us. We'll start with the crude oil prices, where we've seen 10% of gains come in this week itself. The news is in. Has it been factored in? How do you look at the price movement from here on?
Good morning, Manisha. I think, what is happening is, that the rising interest rates are putting a big question on what's going to be the future demand for oil. And OPEC has estimated demand cut of 1.1 million barrels overall. So as OPEC signaled that they will be doing a 2 million barrel production cut. But I think realistically, because already we are short on the production against the targets, I think a million barrels would be out of the supplies. So I think they are looking at stabilizing the prices at around $80 to $90 bracket. I think they would not see prices sustaining too much above 100 at this point of time without West intervening too much. And I think 80 to 90 should be comfortable for a balanced approach. And there are estimations of reduction in demand. But I think as China coming back from the lockdowns, from here onwards, I think October to December quarter should be much higher on the demand. So prices should go up. $92 to $95 for WTI is on the cards right now. So another 5% upside is what I'm seeing in the next couple of weeks.
Okay. The surge that we've seen in metal prices, how would you read that too? Because, there are now conversations about how LME from at least a company will not allow a product to come, metal from Russia to come in and trade or be stored on LME warehouses. Do you think this is a beginning? How are you reading this step and the kind of jump up that we've seen in many metal prices, whether it's zinc, which has gained 5% in this week, or copper prices up 3%, aluminum, steel prices also seem to be jumping up right now. How are you looking at this performance?
I think, when we're looking at LME putting restrictions or conditions on the new metal deliveries from Russia, again, so that's a new metal. So the existing metal will still continue to be there, especially Ural or any of these Ural mining or metallurgical, the UMMC and all those things. But I think the similar kind of restrictions, sanctions, which West tried to put on the oil trade didn't work very well. So there are a lot of routes where this metal can pass through and reach the world markets, global markets there. So until unless they don't reach LME warehouses, it's fine. So the metal will continue to reach various consumption facilities. So I don't see any major support coming from this, but a short-term knee-jerk reaction. Metals are struggling from two things. One is expected recession or demand slowdown. Second is the stronger dollar. I think these two trends are going to continue for a while. So I see the current rise as a temporary phenomena, and I don't think metal prices will supply on a higher sustain on the higher levels.
All right. So when you look at the industrial commodities, whether it is energy, which clearly is more buzzing, more volatile than what we've seen metals in the past few sessions or weeks itself, how are you looking at a, let's say, 1 month phenomena or a price range from here? And how do you see many of these ending this current year now?
I think, on the metal front, I would see aluminum to be slightly stronger or slightly outperforming because typically on the two perspectives, it becomes stronger. One is because Ural is a big supplier and it will continue to face sanctions to sell its metal, and it has to sell. So some restrictions coming up from there. The second is aluminum being one of the huge energy-intensive smelting. So the European power prices actually adds on to that the cost of production side. So aluminum could be slightly outperforming, but at the same time, the demand side is softer on the automobile front because of the chip shortage, etc. So where the aluminum becomes the primary victim of that lower production in automobile segment. I think rest of the metals most of them are priced right for this point of time.
Okay.
And if you're looking at by the year end, I think most of the metals should be down by another 10-12%, not higher from here.
All right. So the crude oil prices, while meet some support and will trade in a range of $80 to $90, it is the metal prices which actually could see some more slide coming in here before this year ends. Kishore, as always, thank you so much for joining us with your sense on all of those commodities. With that, that's all the time that we have on Halftime Report. After this break, Business Lunch will take all the action forward.